It's on March 10th. Oh, so it's tomorrow. Okay. So yeah, I'm tomorrow, if it switches, which it should on the chart, just make sure you're on UTC4 and make sure everything is lined up. I know some people don't switch, which I don't purposely understand. Just makes most sense though. Learned in 15 minutes. Yeah, I'm sure it's not difficult. Have you found any success with it? Or what's your thoughts on it, to be honest? I was looking at, we'll go over this shortly, but let me pull up the video that I think you guys will be interested in watching if you got time today. There's a recent video by T-Trades talking about advanced market structure, episode 12 from the 2022 concepts. I think you'll find some use from that video, especially when you pair with order flow. I personally don't understand it a whole lot. It's not something I use a whole lot in my framing a daily bias and just my trading in general. But I think after watching that video, I'm going to keep studying it because I started doing it about an hour ago. And it's definitely interesting because you can actually identify ITHs and getting in at those specific points because that's going to be your optimal trades when using ITHs or ITLs or in close proximity to those to find quality trade setups. Been using it DOM and ICTs been helping me a lot. That's good. Good to hear. Hey, if you pass the account, then solid work. Massive improvements with quarterly theory in terms of which specific time to trade and when to stay out of the market. That's good. Is it the same? I assume it's the same times every day, right? Just pair that up with kill zones. But I'm also curious is, do they do different? Because I know it's like what AMD and then X is what his basis is. Does it do specific things? Like, does it not always manipulate during that time? If there's exceptions to quarterly theory, which there should be. If he's claiming there's no exceptions, then I don't really know if it's reliable. March is usually consolidation month. We should be consolidating or trending slightly lower. Reason being, between I think April and May, we're supposed to put in a quarterly shift bullishly, which I think this is also supposed to be a quarterly shift bearish as we approach mid-March or so. So I am watching that. I don't know. I just based on the fact that we have SMT between ES and Q and D and Dow. If you look here, we're nowhere near old highs. Pretty substantial daily SMT. So if we're looking at a quarterly shift, that would be a good indication. I don't know if we'll continue to climb, but then you start looking at your 20, 40, 60 IPTA data ranges for salsa liquidity, which we have some here, and some here. And you can see it's basically been building this entire time. Obviously on Dow, I would assume that we're going to run down for here at a minimum. And then potentially down into here, which may be the higher time frame. Deem the range discount. We just got to pull it really quickly. Nope, never mind. And then on NQ, same thing in here, daily range. Got some pools. So be mindful of that. But pretty clean price action recently. If you look at the hourly, I mean, throughout the entire week. Last week, I think it was pretty solid. Using the new contract, not yet. I plan on switching next week, but if you go to barchart.com and you look at the volume between current contract and I think M is what the next contract is, right? We have about double the current volume than the latter one. So monitor that volume every single day for next week. And as soon as we switch, then you can switch contracts. QT is like SMT. You don't need it, but if it helps you, then sure. Right. Yeah, I probably won't study it. I won't spend a whole lot of time into it. I know it works for a lot of people though. News wasn't going to make new highs this month, maybe below probability. NVIDIA news was really easy. Yeah, let's run up. Where was NVIDIA? We're here. 4 p.m. run. I don't even know. But overall, I've been loving this current month. Now, one thing I wanted to cover today was using higher time frame bias and kind of dropping down based on a intraday scalping technique kind of approach, I guess. So if you're looking at 5 minute, sub 5 minute, looking at intraday kill zones, things like that, to find a trade setup, and that's what your main focus on. My opinion, and arguably, you should not be using anything higher than the hourly for your daily bias. Now you can go into the Market Maker Primer course and watch the second video. I'll pull that up really now. In the second video, there's a couple different profiles that he gives you based on the kind of trades you want to be holding. It's the third video right here. And he talks about using the 1 hour, 15 minute, 5 minute. And I just added into that the 1 minute chart because I've been watching for so long. And I think that if you use the daily chart, if you go drop the daily, it is useful, right? But at the same time, you're not going to get a whole lot of data, and you're not going to get I think a better read than you will on the hourly, because you're able to look at the next 3 hours, find out where our daily bias is based on short-term highs and lows, and especially order flow. Not even looking at this stuff, but just order flow in general. Our most recent liquidity sweep, are we holding bullish or bearish order blocks? That's really all I'm looking at. And then I'm looking at between 8 a.m. and 11 a.m., where's the next 3 candles likely to expand? Obviously, in tandem with our bias, if we're bullish in this case, we're going to be looking for a sell side sweep at 3 specific times, 8:30, 9:30, or 10. And then using that time-based liquidity sweep to frame a trade to potentially go long. So if we go into here, we then drop to a 15-minute chart. And it's just like a 2022 concepts. Go on Wednesday, go to our 8:30. Right here, mark out our swing highs, swing lows. In this case, we're bullish on the hourly. We know there's a likelihood for us to expand up into the IFVG and such. And we just mark out our 15-minute liquidity pools. Now, the reason I use the 1 minute chart instead of the 5 minute chart, while I do use the 5 minute, if you saw the ATM model, you know, 5 minute is extremely helpful. Different time frames will have different pairings with them. So the hourly chart that you see a PD array reacted to in the hourly chart, there's going to be a 5 minute MMXM. So you'll see a clear smart money reversal, clear entry point, clear second stage distribution, all that kind of stuff. On the 15-minute chart, we react to a PD array. You're going to see a 1 minute MMXM. So when we use that kind of framework, we're looking for an hourly DOL, a 15-minute PD array. That can be a liquidity pool, order block, or a fair value gap. Then we know, okay, as soon as we see that reaction down here during the kill zone at a specific time, right? At 10 a.m., we see that sweep to sell side, especially when it's paired up with a session pool, London. We now know that as a result of reacting on the 15-minute, we know that we can drop down to a 1 minute chart, go to that same exact time, and there will be a 1 minute MMXM, in this case, as a buy model. And then if you zoom in here, right at 10 a.m., obviously not at the specific candle, but on the 15-minute chart, we're now looking at this. We see a breakdown. We also could be using the 930 model to go short in here, but that's counter bias. We have a fair value gap up here. Trades back lower, and you can see we have a market structure shift above the high. Trades into then a fair value gap in discount of the current dealing range here, and then trades up into the buy side, going into the lunch hour. So that's why I don't see a whole lot of purpose, at least for my own trading, into going into the daily, although, you know, we're at all-time highs and things like that. Yeah, sure. But intraday, you know, coming to the chart, first thing I'm looking at is the hourly chart. Are we likely to expand? Where's the pools? Where are the gaps we're likely to trade into? What's the most obvious thing? Then I'm going to the 15-minute and we're waiting for a 15-minute reaction. Now we can either be trading to that level, trade into that London loan looking for a short setup, or we have to stay patient and wait for a price to potentially get down to that level, then form a trade setup based on the 1 minute, 5 minute, things like that. Now, obviously, if we're then as a result reacting off of the hourly chart, we'll go back. If we see an hourly PD array that we want to be hit, or we're just now trading off of something like this, we have an hourly gap in here, right? You could then be going to the 5-minute chart and looking for a 5-minute market maker model in here, which is probably more difficult, but still manageable, as we then trade up even further, which you can kind of see in here as the 5 minutes we react to the the hourly gap in here, trades down. Is there SMT? Let's take a look. Go to Wednesday's PA. There was. There you go. So you got your bullish SMT. Pair that up even more with your everything else, and that's going to be your higher probability trade setup. Exactly, even more confluence. Been studying the MMXMs and finding it to be very useful. Anyway, you could see some examples this stream as well. Yeah. Well, I guess there was one. But remember that for MMXMs, the biggest tip that I can give is you need to know what time frame we're going to see that MMXM from. So MMXMs are always going to happen. There's always going to be a market. I mean, every single movement is an MMXM in some sense, right? On a specific time frame. You're not going to see it all the time, but understand that if you're comfortable with the 1 minute, the time frame that we have to be looking for a PD array is our 15-minute chart. So realistically, you go into the 15-minute chart, you look at your kill zones, every single kill zone, you'll see most likely a 15-minute reaction. Right, so we can start our hunt at 8:30 or 7 o'clock if you're using Forex. We find our PD array. Whatever one we hit within that kill zone, we know there's going to be a 1 minute market maker model as a result off of this. So then you're dropping down into the 1 minute chart, finding your MXM as a result of that gap fill. And there's your clear sell side, relative equal sell side, trades up into a gap now. And boom, there's your long setup. And that's still a good, 20 points, whatever it may be. Yeah, 44 points. Same thing if you're comfortable with the 5 minute and the hourly, which I think is probably the best if you're new to MMXMs or just trading in general with ICT concepts. You're going to be looking at hourly 5 minute. But that's the way that I look at it. I prefer if we see a 15-minute reaction. If you've seen the models that we trade recently, it's going to be based on that. And then some days you'll have a reaction off this, like where we have a higher time frame gap that we're trading into. In this case, we have an inversion. You see this fractal in here, right? If I was to drop down to a 5 minute, we drop down to that section. You now see there's a 5 minute MMXM in here. Sell side, buy side, trades back down, trades back into the bearish order block, another fair value gap entry. And there's your start of the kill zone right at 8:30. You could go short right off this. Down into the sell side and needs to the further higher time frame gaps. Heard ICT say that there's a MMXM is really just a move lower while bullish to move higher after that. Right. Yo. What up, Rob? If you watch that Essentials to ICT Market Structure, that video was crazy good. Like, I think there'll be a lot of gems in there that you probably missed. Right. But your highest probability MMXMs are going to be higher time frame reaction off any PD array, and there's a 1 minute, 5 minute MMXM as a result. I think that's the easiest way to look for it. Obviously, if you pair that with a higher time frame narrative, that's your bread and butter setup. If you go to previous days and you look at, okay, where are our highest probability trades? And I think for everyone, the easiest ones to look at are going to be your 2022 and your MMXMs. So whilst that's easy, you also have to pair a bunch of stuff up and actually use time to enter. So your liquidity sweeps are going to be at 9:30, 8:30, 10. That's why I've been preaching that logging your trades and logging your daily pictures from your hourly, 15-minute, 5-minute, 1-minute when you're looking at intraday scalping. That's going to be most beneficial to you, because when you have downtime or you want to compare stuff, you go back into old data, able to actually find the patterns that repeat and what you can use as a model. IFEGs too. Thinking about fading my past self. Only did 2022 models. I mean, they work though, right? I agree. Simple. It's like, I think there's the path that everyone takes is you start learning it, you're dumbfounded, then you go into a stage where you want to learn everything and it becomes slightly difficult, and then you go back to the basics and it's very simple. You look for the same stuff every single day. But if you can avoid that period where you want to learn everything, and just start just grinding the same stuff, even though it's boring, that's where the real progress is built, is in the work you're avoiding. Curious if we start this MSM on the daily. I think we will, just because we have the SMT at the highs and we have such a large displacement like this with 2 candles in the hourly, creating that market structure. If we may trade back up into this, I'm not really looking at this fair value gap. I'm looking at the bearish order block in here. So if we want to tap that maybe on a Monday or on a Tuesday, something like a classic expansion where we have Monday, Tuesday creating the high, taps into the bearish order block there, and then we start trading lower, which, although we're filling this fair value gap and candlewise and holding it, we may just see expansion down. Also, I've taken out an intermediate term low here as it filled the gap. So that, to me, looks like a proper market structure shift. The XY to sell model is kind of my concern right now if you want to see lower prices. This is literally from January 19th. Okay, yeah, that's kind of dumb. Yeah, so I guess we are in a sell model. We do have, though, this volume bounce that we could get a reaction off of, and we also are in discount of this dealing range now. But yeah, that does look like MSM, and we have relatively cool lows down here too. It's a good point. We'll have to look at probably the Euro pairs and see what they're doing. So I gotta laugh when ICTs are fraud. I know. Like this line here, this purple line was drawn from January 19th, and it's basically the same exact thing we got to the T. I think that's somewhat absurd. Oil's been pretty clean too. Decently clean. I am watching this though as a market structure shift. Gas prices may increase. Sorry, this is sibi. Especially if you can hold this bullish order block. I'm going to be watching this as my analysis here for, whoops. Screenshot this, I'll send it over to non-indices. Also, I think it's good. One thing, if you're struggling with daily bias and we're trying to find our pull, keep a narrative of the past maybe week or two. 2 weeks is kind of my go-to, where you're keeping everything on the chart that we just did. So I'm keeping these sell side buy side sweeps, the continuous buy side purges to me. This kind of looks like 3 drives, is it not? Well, 1, 2, 3, with the quarterly shift in mind. So it's good to keep these on. I'm not going to have all these STH, ITHs by tomorrow, but it helps you build a narrative. If we're pulling up a chart, a naked chart, and looking at the hourly, it's going to be a little bit more difficult. It's not going to be impossible, but you're going to have to look at the entire thing. I think if you just keep it up, focus on what's actually being shown to you, then we'll be fine. Obviously, if you have gaps that are efficiently filled, you can disregard those. Might try Euro futures. I was tempted. I looked at, for some reason, Euro's been so clean, and I didn't even know that Euro futures were allowed in prop firms, so I might jump on that wave too, just to kill zone at 7 a.m. Yeah, we'll see. Isn't there a deal with the Euro to rebuild Ukraine? Does that affect the Euro? I don't know. Probably. I mean, you could see manipulation in there too, especially if there's news drivers coming out. What I trade oil or gold, but I hate how range bound it can be. I like oil just how clean the MMXMs are. They're super like 15-minute, 1 minute on the on CL is just go to. Probably some of the best. Gold I don't like because it's heavily manipulated. A lot of news drivers create a stupid amount of volatility in gold. I think we can go higher if you still take these out. You think? I do like those relative equal lows, but we'll have to see. I think you're right. It's more important that we focus on the quarterly shift at the low end near April, May than trying to predict this end. Anyways, it doesn't matter, to be honest. We can predict all week if we want, but intraday's all that matters. I'm just going back to old price. Macros recently have been phenomenal. Got basically all week solid macro. We got entry here on this fair value gap reaching into the all-time highs, as well as this fair value gap reach here. Stop number taken. And PM session too. Your profiles, now that price action is better than it was in February, your profiles are going to come in really handy. So make sure you have at least 3 AM profiles you're looking for. That's going to be your basically standard power of 3, a prolonged power of 3, and then a double Judas swing. Let me send a screenshot really quickly over to the chat. They're going to basically just look like this. Oops. Those double Judas swings are going to happen on low probability days. So pre 8:30, sometimes on Monday. Those are the two I'm looking at for those lowest double Judas sometimes, and movements after 10:30. So when we see that third one, it's going to be highest probability trades are going to be post 10 o'clock, sometimes post 10:30. That's what I wait for. Usually lunch and PM. Yeah, PM works too, especially on Mondays. Or you just scalp the 9:30 open. Same. Got a monthly bisi. Right in here. Up to 20, up to 40, 60. Got that monthly buy side. I'm liking that too. Where do you have more info on the double Judas? It should be posted in. Well, here I'll send the PDF for the AM profiles. Those are the ones that I use. But really, they only happen on low probability days. Sometimes they happen on 10 a.m. news. It's gonna be your 10 a.m. news. It's just 10 a.m. news, not 8:30, but just strictly 10 a.m. pre 8:30 and Mondays. Now, your highest probability single Judas swing expansion or your market maker models are going to happen on 8:30 news days or on days that don't have news and don't have news the next day. So your 9:30 true open with no 8:30 the next day, which does happen rarely. But anyone know if the news indicator is done being buggy? Let's see. Do I have it? It's not. Oh, right here. Oh, I think it's done. Nice. We had 10 a.m. news Tuesday, Wednesday, 10 a.m. news, Thursday, Friday. Oh, no, that was last week. We'll have to wait then. Yeah, it was buggy the past couple of weeks, so I stopped using it. But if you go to indicators and you look up, just look up the live economic calendar by 2 degrees. He's got some crazy stuff, but you can pull it up and customize it. You can even have lines like this where it shows you when the news is coming in, which is helpful if you can pull it up on a 1-minute chart so you don't miss news like that. It's so funny that we use indicators now for stuff we're too lazy to mark out on our own. News, highs and lows, fair value gaps, and time. The only indicators we have now is just bright colors to indicate, yo, here's a macro, instead of stochastic RSI. Yeah, price action is really smooth nowadays. I think that December price action was probably the worst I've ever seen in terms of a full month PA. We can go back actually to look at. Oh, by the way, if you look at that 15-minute, the 5-minute, we'll do the 5-minute analysis from yesterday. If you want to use the ATM model, if you didn't see the live stream recording, I was watching this order block here. We had 8:30 news. This is the order block on the 5-minute I'm spectating. So 9:30 comes, taps it once. We're holding this bearish order block too. Taps it there. 9:40 comes and we're still holding that bullish order block, as well as the 1-minute fair value gap that forms as a result of the 2022 model. So if you go back to the 15-minute chart, we look at our 8:30 price, and we look to the left of it. Well, our most obvious swing low is going to be here. Our most obvious buy side liquidity pool is right here, as well as the hourly. So if we're using just our strict 2022. Look at your 1 minute. You got your sell side purge, your market structure shift above this old high, trades back down. This fair value gap then becomes your low risk entry point. We also have a breaker in here, which is why that the breaker that I think Rob, it was you, entered on it too. This one down here that I wanted to see hold, traded up into it, took a loss on that, traded back down, traded back up, and then I entered again in here and in here. Oh yeah. Precision getting that dude took a loss on the 9:30 open yesterday off the breaker. There's so many subs, but him I lost limit for the day, so I just had to demo everything. That's tough. That's good risk management though. Good stuff. I really wanted to see that breaker hold though. It was like a perfect 2 candles. As soon as this one was forming, in my head, this was already a breaker. took out sell side, trades back up, confirms it with displacement. But then, of course, it has to run down to the IFVG, trade into that, and then leave. But then after that, price action was just too clean. Order block whole year held, trades back up for value gap at the 950 macro. Order block such, and then right at 10:30, right when we expect to see that high form on a bullish day, 10:30 to 11 forms are right there. We never touched that high again. It's also important to mention that the true kill zone between, in this case, if we're looking at 8:30 news, it's going to be your true kill zone is going to be between 8:30 and 10 o'clock. We kind of shifted back an hour, right? We're still including it to 11, but in my head, I want to see the same exact price action time-related elements play out within these hours. So if we're bullish, we see a higher low created between 8:30 and 9, and then the higher low created between 9:30 and 10. Same thing with it for a normal day when we have a low at 9:30, 10 higher at 10:30 or 11. So I kind of see this expansion past 10 a.m. as kind of our lunch move, but you can see the low put in right at 8:30. Is it likely to keep this high? No, we've already pierced it multiple times outside of 9 o'clock. So this high being put in at 9:02, this is a incorrect time, right? So this high being put at 9:02, it's not in between 8:30 and 9. It's unlikely that we're going to take out this buy side and leave because in the higher time frame, we have not pierced this high. So we still have a bullish bias. We dip down here at 9:30. So we know that if 8:30 to 9 is supposed to put in our low, we need to see between 9:30 and 10 put in our high. So if we look between here, if this is the current high of the session, then we expect that to be taken, and that was the assumed take profit right at 10 o'clock. And you see we make that high and eventually continues till 10:30. Got the second entry on demo as well. I was taking the sell side as like an A plus turtle soup. That's true. Plus, look at the candle closures on this too. This was like a beautiful wicks only candle closure staying above, technically holding this bullish order block too. We're not closing below it. Trades above the order block here. We have inversion gap. Like that was just a beautiful setup. And higher time from bias, right? I was genuinely surprised it didn't work. But I mean, not going to be perfect, right? Yeah, if there was a gap in here too, it'd be great. Or a breakaway gap or something. I think one thing that, as well as for value gaps and order blocks, or sorry, as well as for value gaps and swing highs, swing lows, to read price, you need to understand order blocks and order flow. It's definitely an advanced topic, but if you spend the time in front of charts and watch how order blocks are held, it's the true narrative. If you pair it with inside and outside days, or not inside and outside, intermediate term highs and lows. I don't know what I'm talking about. Intermediate term highs and lows, short term highs and lows, long term highs and lows, plus order flow. That's the secret to the market right there. I was looking at this inversion gap down here. If you look at prior to 9:30, sorry, prior to 8:30, this sibi as the breaker as well was only painted through with a up closing candle, so it's still inefficiently filled with the sell side. We need to see both buy side and sell side. And then if you drag this over, then you see the sell side run as this becomes an inversion PD array. That to me is really the only reason. We're still holding this bullish breaker, so we're allowing for something like that. I don't like the fact that we had to tap into there, but it is what it is. But then you can then see as a result, the speed we get from basically from this low, even in here. See how there's all this working back and forth, back and forth, back and forth. Efficient delivery all in here, efficient delivered now in this area. And now this wick is really the only part that's inefficient. Then you can see the speed we get as a result of the efficient delivery, and then we start bouncing back and forth as we trade off the wick back and forth. Put your 25 level on this. Extend these out. Taps to 25, trades back down, taps to 50, trades back down, taps to 75. And there's your efficient delivery on every single quarter. Then it trades back down. Get the same exact movement. So would you call that an MXM in some sense moving towards buy side? In here? Yes. Right in here. If you look at this, if this is a 1 minute MMXM, what PD ray do you think we're reacting off of? On what time frame? Well, if it's a 1 minute, I'm assuming it's going to be a 15-minute fair value gap or a 15-minute liquidity sweep, right? If you go over here, delete all this stuff, what do we see as a result? 15-minute gap right in here. Bisi taps the order block, I think perfectly. Is that perfect? No, we miss it, but decently close. Taps the wick of the order block. That's her 15-minute PD ray lined up with a 1 minute MXM. Random. I mean, you can just keep going. You can keep doing this over and over, right? Where's another? Here's a fair value gap here. You know, trades onto this, and then I'm looking at this low, high, lower, low is a market maker model, right? So we actually may gap down tomorrow. Watch to see if we gap down and take this out. We don't need to because we're filling this, but the PD raise I'm looking for that MXM kind of profile and higher time frame to lower time frame is going to be order for value gaps and liquidity sweeps, especially. Order blocks not preferred because you're going to get kind of too much information. I think too many. You're going to be looking at every single candle as a potential MXM, which is true. But if we're looking at just high probability times, like look at this right here. Yeah, we have a fair value gap on 15, trades into it. How come this does not play out? How come this fractal right here, where it dips into the fair value gap on 15-minute chart and doesn't reach up into the buy side? Why? We're missing the first time, right? We're missing the first point, which the fact that this dips in, it does dip in during, I think this is Asian, right? Oh no, sorry, it's outside of Asian. But this here then fills it at 2 a.m. exactly, fills it, trades back up, and if you go to a two-way 1 minute chart, here's your London 1 minute market maker model. Yeah, you gotta be mindful of the time, but good analysis though. I like it. Trades into here, breaks above the breaker, which is actually the true market structure shift that I'm watching. Here's your CISD on 1. Taps it multiple times with a bullish breaker and a bullish order block here. Entry, or reading this fair value gap if you wanted to. Already broke market structure. Fair value gap entry, order block with CIC. That's another high probability entry. Trades up, retraces. Second stage of distribution. You can see all these things moving in tandem, right? We got a 15-minute fair value gap, trades into 15-minute fair value gap, dips down here. We have a breaker. Now, what time is this second stage of distribution happening? What's this right here? Excuse the news folder, but right in there is Macro time. It's a macro time. 250 to 310. Top of the hour. Somehow randomly creates a second stage of distribution for the MMXM. So yeah, when you start pairing these things together, it becomes lethal with how good they are, and it almost feels illegal. And then look what's our target? It's a session pool. It's Asian high. That becomes our target. Obviously, you can ride it all the way up here, but you don't need to. Right, with a sub 1 minute MMXM also. Multipedia, yeah, right. And think about how low you can take that, right? 5 minute to the 1 minute. You basically get a 15-minute model. That's why the 15-minute I think is the bread and butter. When he says it's the what is it, the bellwether chart? This is why. You can see in here too, right? Here's your 15-minute. Instead of filling a gap, although yeah, we can use this as a market maker sell model in here. Our higher time frame bias is bullish, so we need a liquidity sweep. And there's your second stage of distribution also within the 350 to 410 macro. Spools up, taking out the old highs. Yeah, complete top down, monthly, daily, hourly. That's going to be your highest probability stuff. When you really drop down from all the way, you know exactly what MXM you're. Only thing I'd be careful with is it's analysis paralysis, right? So if we get conflicting data on multiple time frames, sometimes it's going to be hard to frame a trade like that. So I would be careful. Monday's just going to be like last Monday. Hopefully not. It could be though. Something like this kind of framework, I agree. The morning session was terrible though. Right, it does. Yeah, if you're patient enough, you can get those killer moves right there using all those time frames. Everything lining up perfectly with time too. We do have these fair value gaps here though. This one and this one that we may create some consolidation within. But if London does take a high out, then I'm watching for a potential drop down here during the AM session. Right. Exactly. Yeah, I'm not looking at that, but start of the week, I think it's good. Wait a minute. One micro short on Sunday. right before the is it even open then? I don't even know. See if it repeats the Monday, we could. I'd be careful though. Here's another example right here, right? Got the hourly fair value gap, trades into it, 5 minute MXM. during a time window. That plus profiling is my whole model. I feel like, are you using weekly profiles or daily profiles? I assume both. I feel like daily profiles for me is more reliable than using the weekly, just based on the data I'm given. But I think using weekly when looking at the economic calendar, like I'll look at the weekly profile based on, I think Tuesday, Wednesday ish is where I start looking at the weekly profile. Anything before Wednesday, I don't think there's enough data. But right at Wednesday, you probably know the weekly profile. AM Trades is a really good PDF on that. I think I may have it downloaded. Let me see if I can find it. Maybe a weekly range pro. Is it this one? I think so. Yeah, we'll have to see where Sunday opens up. I expected a gap lower. And hopefully we can reach for the relatively lows put in down here. But no INFP. We'll see how it goes. It's definitely such an easier market to start looking at, though. Finally seeing things that repeat every day and in a cleaner fashion. Use daily profiles to see a lot of people looking for a continuation, retracement, the M reversals, or continuation purge. I see. I use two different daily profiles. I use the London, New York profile, that kind of what did London do? And then I also use the AM profile of between 8:30 and 11. That similar kind of process it functions as, which I probably will implement more with based on what London did. It's actually a good idea. Let me write that down and spark something. Same. Yeah. Month 10. Month 10 and month 7. Month 8 too, but month 10 is probably some of the best indice profiling stuff and just looking at setups. Besides the MXM primer course, month 10's got crazy good stuff. Exactly. It's just a handbook. London does this, higher time frame showing this. We know where AM will print, especially when you pair that with the news. All right, we got 8:30 news. We're going to use that as a driver to complete the MXM. And there's really only two profiles, right? It's either continuation or some sort of reversal. Right. Reversal continuation. It's either every single morning. We're looking for a liquidity sweep. And if there's no liquidity sweep, then that means that at a higher time frame. Like we saw that on, what was it? Tuesday? Yeah, Tuesday. There wasn't a liquidity sweep here, and it was difficult for me to enter on this day specifically because we just displaced all the way into basically the close. And for me, that's something that I'm willing to miss just because it rarely does happen. But I think I have to get better at it because these kind of large displacement moves where we're just continuously moving down on the higher time frames, it's going to be useful to use when you get so many different entries like this during macro time, during, right outside macro times and into PM sessions. Got into trading both sessions. We don't have class. Yeah, I've never actually really traded PM like that. I don't know. I assume it's easier just because you actually have the data of lunch and New York, and it should be a cut clean PM profile. But I haven't had the experience in it. Yeah, exactly. Which I guess is the same with the AM session too, right? Can be clean, but you get chopped up. Although I will say that the PM macro is probably the most fun macro to trade, partially because there's a whole lot of volatility that comes in right at close. Yeah, right. But when you're on sides and you trade these, if you closing macro and you're on sides, you get that entry in. Oh man, when that run up is happening, right at like I don't know what it is, like between 350 and 4, and it's just spooling, reaching all the way up for the buy side, right as close hits, or right after close, multiple highs just getting pierced. That's extremely fun. Yeah, last 10 minutes, right? And normally you get 2 entry points. You get one at 315 and you get one at 345. Sometimes 3, which in this case we got one here at around 345. Probably could find another example. 343 spool as we reach for untypical buy side. Love it. That's a good fib projection right there. Probably wouldn't even caught that one. What's the time frame on that? 1 minute chart? That's not on Friday, is it? Must be looking at something else. Not gonna lie, standard deviation is the most powerful concepts I've ever added. I was just talking to someone about that today, and I don't personally use it, but I feel like do you just pull up the manipulation? Like I feel like I'm gonna start using it just because of for profit taking. 2.5 to 2. Or -2 to -2.5, whatever it is, 2 to 2.5. It's super clean, especially when you start pairing it with the things I showed you earlier in the stream with the 15-minute, or higher time frame liquidity or pools or gaps, and then trading into a lower time frame of XM. I'm assuming you're just pulling it for the manipulation leg, right? Either manipulation leg or the first, like 2 to 2.5 is up here, but I don't know how you would theoretically pull these. But the amount of times that I'm really holding past external range liquidity though is very rare. So I probably won't end up using it. If we're looking at internal range liquidity, I just go for premium or discount and then use the low hanging fruit just like the 2022. I probably just gotta practice with it more. Like in here, I would assume you would pull this leg. That's your manipulation leg for the breaker. You do get -1 above the buy side, I guess, but yeah, Dexter Lab. PO3 Trade on Twitter is a good PDS. I'll look them up too. See, you have 1 and 1.5 for that example. Is it perfect? Oh, yeah, it is. So like 1.25, I guess. Almost. Am I? A couple points there. I just want to nail this ITH, STH, LTH stuff. All the market structure. I was rewatching episode 12, and I keep watching that one because I feel like there's stuff in there that a lot of people missed and just skipped over. That's why I shared that video from earlier this morning or earlier this afternoon. The one I said at the very beginning, this one right here. If you got time today, I think it's a good watch, especially when you pair it with episode 12. Because this stuff, and when you mix it with order flow, reading order blocks, you almost, you kind of have a cheat code in the fact of you have a tool where you have two things that are pairing up with each other, and you can find where the market's going to go based on the short-term lows, intermediate-term lows, whatever's forming, and order flow. It is, for sure. Going back and just watching old videos, which I found great, great resources in just old videos and old content that I've seen before, kind of skimmed over it. Because there's stuff that when you're watching the first time goes over your head, and then when you rewatch it, you're like, oh, that's what he's doing. That's what he's talking about. And it's blatant, obvious stuff sometimes. Sometimes it's the most obvious stuff that you disregard. You're like, oh, I already know that. But he's pointing it out to you, and you go back and watch it, like, oh yeah, that's why he's pointing it out. That's why, like, for me, I disregarded higher time frame for so long. Not disregarded, but I wasn't implementing and utilizing it the way I should have been. I was maybe glancing over it once, but more or less just looking at 15-minute, 1 minute, not even looking at higher time frame. And that to me was difficult because then I got stuck up with just watching those lower time frames, trying to scalp the macros, things like that. Which it did work, but finding these larger moves and directional bias is very important. And sometimes that's just, as simple as going back and watching an old video and you're like, oh, that's how I do it. Which I'm currently rewatching the 2022 mentorship, going it from start to finish. And there's stuff in there. It's like, I don't know how I missed that. Like even the 830 liquidity pools, you just look at 830 on the 15-minute chart, you come to the left, or you just look left of it. That first swing, higher swing low you see, you mark those out. And then based on your higher time frame, if we're going up or down, you just anticipate the other side being swept. Right? If we have a higher time frame bullish bias, we just mark out the closest sell side liquidity pool. Like same thing over here, right? So closest sell side liquidity pool. Have we already swept that? Then you look at, okay, what did London do? Did London take out a low? Yeah. Are we continuing the MXM? Yeah. Then we wait for a gap fill. Wait for that gap fill at a specific time. In this case, it is at 9:45. Then we form a 1 minute MXM off that. And it's just rinse and repeat. It's stupid sometimes how easy it is, and sometimes how difficult that we make it. Like in here, if we're bearish, look at that closest swing low to the left, trades above it, breaks down, taps London low. Right, and it's over and over and over again. There's really nothing you need to do once you find a useful model that repeats. There's no changing it, and sometimes that means that whether I'm saying something or someone else on Twitter or someone else on YouTube is saying something that you think is useful, but may cloud your vision and change your model. Sometimes it's just throwing it out. Like I'm here saying advanced market structure is useful, but if I study it and I don't get it, or if it just kind of messes with my head, I'm going to throw it out. I'm not going to use it, although it may be something that works for other people. It's not something that you don't need to use everything, right? He gives you a weapon. He gives you an arsenal, and you're supposed to pick the one weapon or two weapons that you want to use. You try and carry all the weapons, you're just going to end up just crushing yourself. It's just the fear and FOMO when you're in the market that gets you nuts, not follow your simple plan, right? Impulsiveness and basically lack of discipline, which I guess falls under impulsiveness too. But if you go into backtesting, if you go into old screenshots of your entire morning sessions and have the same exact thing you're looking for, 15-minute liquidity sweep, 5-minute change in state, 1 minute MXM, something like that, it becomes easier to track your results and actually see what you're doing wrong, right? Something as simple as we're only going to enter on fair value gaps. You start entering on momentum, you start entering on order blocks, things like that. It's going to mess up your actual performance and trying to gauge if am I doing better than I did? Am I taking what I'm supposed to be taking? But it should be cut clean, written down rules where this is what I'm supposed to follow. If I'm not following that, then I'm doing something wrong and I can improve in that area where it's in my control. Obviously, if you have something like the breaker, after we dip down, that example over here, we have a 9:30 liquidity purge, trades back down, trades above it with displacement. You got the breaker lined up with fair value gap, lined up with higher time frame bias, and it fails. It's like that's out of your control. You're gonna be wrong. But that's the kind of loss I'm fine with taking. Right, exactly. Could care less when I take a loss following my rules, but not following my rules are losses that hurt my mental. And if you think about it, that's really like all the times you take a loss, you're like, why did I just do that? Or why does that hurt so bad? And you have to go back and increase your position sizes or increase your trading, how many trades you take. It's all because you didn't follow the rules in the first place. Or you're now upset about a loss that you shouldn't be upset about, when in reality it's just something that you can't control. And the way you deal with that is by controlling the things you can. Dropping position size, trading inside of a macro time, waiting for the next high probability setup instead of trying to push the button and change your P&L instead of executing it properly. And it should be just focusing on executions rather than the P&L. As soon as you start looking at that green and red, and it's really until the end of the day, it's going to do something to your mental, which is preferably why I have that stuff turned off. At least when I'm trading, I don't like seeing the P&L. Only reason I have it on in here is just for recording purposes for YouTube and stuff. But really, I think optimally, keep your position size like on, and if you want to calculate, your risk. But when you're in a position, maybe don't have that P&L in monetary value. Maybe have it in ticks, or maybe just have it off completely, because then you're executing on what is the chart showing me instead of what is that green or red. And maybe that also means that you turn off your P&L, until you can see it maybe at the end of the day. Because then you're like, all right, I just took a loss on 2 contracts. I don't know what my actual thing is. It could be, I have a general understanding of what it could be. Do I want to push that even further? No. So I'm gonna drop contract size. I'm gonna drop how many trades I'm taking. And I think that's where you actually see some improvement. Separating the losses that are my fault and the ones that aren't really improve my mindset. Exactly. And I think a majority of them is, 100% of them are your fault in reality. You either read the market wrong or you didn't follow your rules. And that's the only 2 categorizations. And the ones of you reading the market wrong are something you can improve on, right? Because you take that loss and you're like, all right, there was this I forgot about. There was this inversion fair value gap that I didn't see. That price then traded back into efficiently filled and then flew off, which, I'm going to read that wrong. And then the things that you do wrong anyways, over leveraging, over trading, not following your rules, you can fix that also, right? So all of this entire game is just you versus yourself. And the whole reason that you may not be succeeding, or the whole reason you're delaying it, is because you're not self-reflecting. You're not taking into account the fact that the reason I'm losing in this market, because if you believe it's algorithmically controlled, which I do, the only reason you're losing is because of you, right? You're either reading it wrong or you're not following rules. And both of them you can control. You may not be able to read it 100%, you're going to become a robot, but you're able to improve on that sense. And I think that's helpful to know, because then you actually have some control over of what you can do and how you can get money out of this market. Yeah, and not having a set time. You're saying, I see. I think you shouldn't have a set time that you have to be successful by. If you're thinking, yeah, I'm gonna learn this in 2 months, it's not gonna happen. I mean, it can happen, but if you really have a plan and you're willing to stick with it and willing to suffer, then sure. But that also brings it to if you're sitting in front of the screen for Asian session, then London session, then New York, then lunch, then New York PM, you're treating it like a hobby. You're really treating it like a hobby, and trading isn't a hobby. You gotta pull up to the screen, put your suit and tie on, get in, get out. If it's not there, you don't touch it and you leave. All right? You clock in and clock out. I'm not showing up to work more than I have to. I have set times between 8:30 and 11 where I'm looking for a setup, and you should too. Whether it's London, whether that's New York, I think you should have one specific kill zone you focus 95% of your time looking at. The other 5% is just maybe glancing over those PM sessions, glancing over those London sessions to see what they did, and then implementing it into your own trading, right? but really just focus and have the discipline at the start of focusing on one kill zone. And for me, I used to look at between when I had time, like if I wasn't doing anything on a Thursday, you could catch me sitting in front of the charts all day from 8:30 to 4 p.m. And it's exhausting because then you're trying to be right in every single price prediction that you see. And it takes a toll on your mental health because you're looking at every single candle between 8:30 and 4, and you're trying to predict every single one. Every single one. You're wrong. You know, you're right on some of them, you're wrong, and then you find out you're wrong more times than you're right. And that itself is just not something that you want to be putting yourself through if you can avoid something as simple as turn your laptop off, right? Right, exactly. When in reality, it's not sitting in here that pays you. It's actually the inverse, where the less time you're able to sit in front of the screen, typically the more you get paid. Not the longer you sit here, you don't work overtime in these markets. It's just same exact stuff every day. If it's not there, you leave. And it sounds stupid and simple, but that's the reality of it. And it hits you think exactly. Right. You start putting on random trades, you don't know where it's gonna go just because I want to. You get stopped out. Man, I'm gonna over leverage. You take the win. Oh, I did something right. When in reality, both those is wrong. Because once you really understand what you're looking for, it just becomes psychology. It just really just becomes psychology of what am I doing to stay disciplined, stay patient, and what am I doing to mitigate the potential losses? Because I'm sure everyone in here has blown accounts before, including myself. Blown accounts, and then you go in and you blow another account on the same exact thing you just did before. And then you sit down, you look at yourself like, why did I just do that? Why did I just place the same exact trade I was trying to fix? You're like, I don't know why I did that. It's because in reality, it's one, you're not respecting the risk, and two, it's because you may not have a set plan written down, and you're reacting off of impulsiveness and thinking that your time in front of the charts and you have to be right is going to lead to payments, when in reality it's all about just looking at the same stuff. It becomes boring almost. Like you're looking at the same exact stuff over and over, the same kill zone, the same liquidity sweep, and it becomes boring. It just becomes work at that point. There's nothing fun about it. It's just, I mean, you want it to be enjoyable. I think trading will always be fun where you're predicting the future, but the dopamine rush you get when you're winning and the ultimate low, disappointed, depressed feeling when you lose needs to be removed. And the way you do that sometimes is by not clicking the button. You got to just tape read longer. You got to tape read or back test to the point where it just feels like it's like a rhythm. See the setup, take it. Doesn't matter if you're winning or loss. Don't see a setup, you skip. And that's the two options you got. Same. I'm not looking at anything really after 11 a.m. I'm normally closing off stream or closing charts down by 10:50. Like for me, most days, I'm waking up looking at the charts around 9:15 till around 10:45, 10:50. That's it. And obviously, you can narrow that time down where you're looking for a setup between using news, between kill zones using news. So if we have 8:30 news, I'm looking between preferably 9:30 and 10 for there to be a setup, even between 9:25 and 10. Sometimes I'm using the 9:30 volatility, sometimes I'm using the macro. If you have no news and there's no news the next day, we know, okay, there's a great chance that 9:30 is going to create a 9:30 to 9:45 is going to create some sort of reversal using that 15-minute liquidity pool, and we get a 1-minute market structure shift. And MMXM following through using macro times to enter, or even outside of macro times. Only started in November and I got 100%. 100% have a lot of things that are analysis related I need to work on. I think it's everyone. I think but that's good self-reflection too. I think that's why journaling and taking screenshots of stuff is very important, because you can actually go back and stare it in the face of, what did I do wrong here? And sometimes it's going to be annoying because you're going to have a screenshot that has 350 contracts placed over a 1 hour time frame with 17 trades every 2 minutes. And you're going to have to you're going to screenshot that and have to look at it and be like, what the heck is this? And reality is that it's going to be painful to look at, but then you're going to really look at it and understand, okay, I can do better than this. I'm better than this. This is the same exact stuff I was doing 2 months ago. Why am I still doing it now? And reality is, I don't know who said it first, but nothing changes if nothing changes, right? You want a different outcome, but are you doing the steps that are required to produce that outcome? Or are you just sitting there saying, yeah, I want to become a trader. I want to do this. I want to get this in life. And you're not doing anything to fix it. You're not taking the steps that are needed to arrive at that destination. You can go look in the horizon. Oh, that looks nice. But if you're not walking there, what's the point, right? So same thing in trading. If you're not implementing the rules, if you're not following your past self's advice of, yo, I blew an account this way by not following my rules, not staying disciplined, are you going to keep that advice in mind and heed to it? Or are you going to disregard it when you're in the moment looking at the chart? Oh, I see this nice setup. That's outside of my rules, but I'm going to take this, over leverage, and then do the same exact mistake, right? And that's all the hard truths. Speaking from experience there, where, I mean, sometimes that's the thing, is that you got to face and deal with yourself. And I think a lot of people can relate, and hopefully you see that same exact stuff in you and me. It may be uncomfortable to approach, but that's the hard reality sometimes. It isn't, but the rule following, I believe, comes, and I just kind of self-reflected about this week, so hopefully for now, listen on to my rules. Yeah, I think having a journal there where you actually write it down and able to actually, analyze, maybe flip back, see what you wrote down is helpful. That's what I have. I have a couple journals here on my desk. That's just, one's basically all psychology, and then one's a whole notebook just for anything that I think of in the day. I'm thinking about, how can I refine my system, or how can I read price better? So one book for psychology, one book for just trading, tape reading stuff. Yeah, those trader roundups by ICT Concepts are solid. It's almost like a replacement of the Twitter Spaces. By the way, if anyone was curious, the ICT Twitter Spaces are posted on Spotify. So if you don't want to go to Twitter and try and find them, I'm going to pull up the episode links really quick too, if you want to use these. But there's a whole archive, and you can actually put it to 1.2 speed too. These are extremely helpful when dealing with psychology and dealing with other things. So if you're struggling with that stuff, or you have a specific topic you're looking for, almost every single one's got some gem in it by ICT. So out of the IFG, you have to be filled before going up. I assume just because the fact that it was inefficiently filled here. I don't really know why. I thought that, to be honest, this would be left as a breakaway. I'd be fine with that. But if you look at this gap, it was originally a sibi, right? And we just displaced through it with news, with such a high volatility driver. So something like this is going to have, if you really think about like slippage and things like that, what's actually happening when we're getting slipped? Orders aren't filling, right? So if those orders aren't filling, there's going to be kind of gaps in price, especially with this kind of news driver being painted like this, where it's just maybe one aggressive, especially with NFP, one aggressive paint up, and it just prints. Think about, if there's slippage in here, there's going to be orders that aren't filled. So especially in a price where it's inefficiently delivered like this, these sell side orders, if there was previous sell side in here, or if there was inefficient buying orders in here too, it needs to be retraced back into. So if we then look over, then I'm kind of disregarding this. This almost looks like a wick to me, inefficiently with NFP. And then it has to come back into here, rebalance this. I'm not looking at this bisi, although I'm not focused on this. I'm most focused on the first one that formed. So that's probably why we had to come back down, exchange those orders back and forth, then start trading back up. And if you look at it, like a lot of times we have to do that over and over. Like if you look at this gap, it's going to be with buying and selling. Very few times do we just have a buying it, like just a one candle pass through. Those are your BPRs, and that's going to create most likely reversal. But if you look in here, we have buying and selling up to this point, so you can kind of refine it down. Reaction off here, buying and selling up to there, then up to there, and buying and selling. Now this sibi is now efficiently delivered, and you could realistically delete it unless you're using it as a reclaim for value gap. Same thing in here, right? Selling, buying. That's also a reason why we didn't have to come down into this range. It's now balanced. We have a wick down into it, but then we're also tapping the discount end of this fair value gap. Taps it there, and we're filling now this inversion with the candle bodies. So these balanced price ranges are helpful because you can actually predict when price is least likely to reach back into a reclaim for value gap. If it's inefficiently filled, if we have something like this, wicks back and forth, you can expect that kind of speed bump in price, right? Same thing with something like this. Breakaway gaps also form very little resistance, but now balanced with just a wick that's inefficient, buying, selling. You can keep doing this over and over. Same thing right here, right? Wicks are inefficient. No candle bodies of buying and selling in here. Extend that out, buying, selling now if that's efficiently delivered. Okay, in this case, we use it as a reclaimed. But you're not going to be able to predict sometimes when it's used as reclaimed. It's just a useful tool to know. But I'm looking at those wicks. If we're expecting a bullish movement and we have a sibi or bisi that's not filled like this, see how this, just a very small portion, a left unfilled, and we're able to wick down into there a little bit. Yes, preferably bodies. When I'm looking forward to creating an intermediate term high or low, I'm looking at the bodies. I'm looking at when price is expected to leave. Although, yes, we can get wick entries, right? That's kind of your standard 2022 is we're looking for a wick entry or something like this, right? And when price is really spooling and we're really trying to get to a target at a specific time, so in this case, we wanted to spool here by 10 a.m. and make a new high. That's when I'm comfortable entering here. We don't need to see a candle body back and forth in this range. Stop going below here with the breaker in mind. But think about as the unicorn setup plays out, we don't need to see a full retrade back into the discount on the breaker. If anything, this breaker lined up with the fair value gap, that's your pretty strong PD array duo. So that there is going to be something that's useful. So when you pair it with order blocks, we get kind of context as to why it's going to be strong, especially when you use something like this, right? We don't want price to just fill here. So in the most basic sense, price is reverting back into order blocks but with gaps. So if we have a gap and there's an order block above it or below it, I'm looking at that price point instead of just the gap discount or premium end. So in this case, if we have a gap like this and we have an order block, a bearish order block that we close through, I'm looking for price and then tap there. That's going to be my optimal short entry. And obviously, you stop above here, and you may have to weather some of this. It gets within a tick. But if you go back into your old price or your old charts and your old price charts and look at where are the optimal fair value gap entries, it's going to be either off of a bearish bullish order block, off of a breaker block, or off of a mitigation block. And that's kind of an order there. It's going to be breakers going to be the strongest. Order blocks, as we're continuing, you want to pair those with your regular fair value gaps. Mitigation blocks are kind of be not the weakest, but more difficult to spot and not as reliable, I think, in my own experience. What's this, right? We have fair value gap larger fair value gap. How far are we going to get into here? Are we going to dig up into just the discount and sell off? We're going to reach into the breaker, right? well, actually this last down closing candle is the breaker. Excuse me. High, low, higher, high that takes out liquidity, fills a gap. And you can also see in this order block paired with a fair value gap. So the reason we're not just tapping here, although, yeah, we missed the wick. So this here, although it is a nice entry point, eventually we come back up, dig into that inefficient area filled with buying and selling, taps the order block, trades back down. Another entry given here with the breaker, fair value gap, ding, 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 sells off into Asian low, then reverses, trades up. Here we have a fair value gap outside of the kill zone, so we're missing some precision elements there. But if you look, I think, does it tap it perfectly? This is your low, high, lower, low takes liquidity. So that's actually your breaker premium end. And the wick there is going to be, yeah. So we are still reverting back into an order block. Just sometimes a difficult one. Do you know when you need to change to NQM? If you pull up barchart.com, I think it's bar chart. Let's look up bar chart. And every day throughout next week, just go through the volume between H and M. As soon as M is higher than H, we switch. So that could be before the contract expiration date, which most times it is. It's going to be maybe 2 to 3 days before that contract expiration. So don't just switch when it hits that contract expiration, which I think it's like the 15th or something. Right here. Yeah, 15th. So I think some platforms have already switched, which I haven't, because if you actually take a look at M, it's still got volume imbalances and a lot more kind of rough PA. Like in here, if you can kind of tell, like this whole section, still choppy. But as soon as that volume increases, we'll be fine. Or you could just use continuous contract, but that's personal preference. Daylight savings, really no differences. The only kind of differences I guess you should be aware of is sometimes it takes 1 to 2 days for the algorithms to, if you believe in this stuff, for it to kind of realign with time. Because think about it, we're kind of switching back. Oh, is it spring forward? So we're going up an hour here in the United States. So if the algorithms function on New York time, there's going to be maybe 1 or 2 days where it's poor PA, not impossible, just kind of low, probably like Monday PA. You know what I'm talking about? Where it's like it's not impossible, but it's difficult. Sometimes around daylight savings, the next Monday or Tuesday can be wonky. That's really the only difference, but nothing different in terms of, anything like that. What happened to the Robin Cup? Something happened, or just wondering? I don't know. He's been silent about it. And if you've been keeping track with his trades on YouTube, he does post occasionally there. But I haven't actually checked the leaderboard in a while. I know. Just waiting. Don't worry. What is his expected return? 11,000%. He's already hit like 20%, I'm sure. Guy's nutty. You already know. Yeah, no problem, my man. We'll see you soon. We'll probably wrap it up there, to be honest. Stream recording will be posted. If you got any questions and if I missed it, or if you got any more Shoot me a DM as always. I won't take up too much more of your night today. Yeah, if you want any PDFs, things like that, DMs are always open. We'll be back on Monday or Tuesday. Depends on that. Yeah, that central bank PDF is good, right? It's almost like it's kind of dumb because it looks like it's hidden, but then when you actually read the first one, the 80-page one, and it starts talking about the time delivery of the market maker models, that stuff was interesting to me. I was geeking over that stuff, but yeah, even if you want that central bank PDF, which we'll keep it on the down low for now, send me a DM, not DF. So enjoy the rest of your night, enjoy the rest of your weekend, spend some time with the family, get outside if you can, and I will talk to you guys soon. Stay safe. Peace.